Now, why was this chapter introduced? Why was this chapter introduced? The chapter was introduced prima facie to not allow escapement of tax from certain hands. Let me take a few simple examples for you to understand what would have been happening had this chapter not been there. So, starting from the example of a couple, let us say the wife is an earning member of the family, and let us say she is doing a job and she is earning around 15 lakhs per annum. Whereas the husband has no income because this fellow is a student. Very rarely do you find this combination. Actually, this combination is quite often. Now, if I tell you, it's quite often. Anyways, now, not only does she have salary income, she also has a house property from where she gets a rent of, let's say, around 30,000 per month, around 3.6 lakhs. Now, you guys tell me one thing. By default, she is in which slab? You think she is in the basic exemption limit or the 10% or the 20% or the 30%? Obviously, she is already in the highest slab. So, what she does in order to escape tax, she might tell her tenant, please don't pay me the rent, pay my husband the rent. Had the provisions of clubbing of income not been there, it would have been taxed in the hands of the husband. Understand what I said? Had the provisions of clubbing of income not been there, it would have been taxed in the hands of the husband, and therefore what would have happened is that on this they could have saved certain tax. They could have saved certain tax. I don't call this as tax saving, I call this as tax avoidance. So basically, clubbing of income protects tax avoidance. Okay. Now this did not work. Obviously, you'll think a little better. What should have told her husband? I'll do one thing. I'll transfer this property to you. I'll gift it to you. Very good. It is covered in section 27. I love it when you catch the concept. The concept is already covered in deemed owner, section 27. You know very well, if a house property has been transferred to the spouse either for no consideration or inadequate consideration, the transferor will be treated as deemed owner. Very good. Now for house property, there is a provision. Excellent. Now think of it. What if I told you that apart from salary, apart from house property, let us say she has some government securities, and these government securities year on year is yielding her around 3 lakhs income. And she says, I'll do one thing, I'll transfer this. Anyways, house property doesn't work because whether I transfer or not, it will be taxed in my hands. So let me keep the house property, but I'll transfer the government securities to you free of cost. Had clubbing of income not been there, it would have been taxed in the hands of the husband. Therefore, clubbing of income, important, not important? Important. So, clubbing of income acts like section 27. By section 27, little different. Section 27 says deemed owner is equal to the transferor. That's fine. But here, in clubbing of income we will learn that if any income has been, any asset has been transferred to the spouse, then the income arising out of that asset will be clubbed back into the hands of the transferor. Are we clear? Achha. Another example. Now, not only do couples use each other as planning tools, they use you people also, children. Correct or not? So there is a possibility that parents, what they do, they might buy one house for this fellow. You know the concept there. If any person transfers the house property to the minor child, not being a minor married daughter, the transferor will be treated as deemed income. But what about assets other than house property? Suppose they bought in the name of their minor child certain debentures. Or let us say, suppose they had opened one fixed deposit in the name of the minor child. Then whatever income is arising in the account of the minor child, in whose hands will it be taxed? Had clubbing of income not been there, it would have been taxed in the hands of the minor, and therefore they would have got a benefit in terms of using of basic exemption limit, had clubbing of income not been there. So you're understanding why clubbing of income was introduced, in order to ensure that there is no escapement of tax. Okay. So before I start this off, there are some terms that you need to know. One is called as application of income. What is the first term I want you to know? Application of income. What do you mean by application of income? Let us say I am getting certain amount from students for teaching activity. Suppose I tell you guys, guys, please don't pay me. Why don't you go and pay to Nisha madam, Rudy, so and so. So see, what will I do with the money ultimately? Ultimately, money is just like water. Correct or not? When you receive it, it has value only for using. So at the end of the day, see, whatever money you give, I have to spend. There's no point of keeping it with me. So I do one thing. Why take the money from you, pay income tax, and then give it to others? What if I tell you, hey Mahesh, whatever is your tuition fee, you give it to Nisha madam. You give it to Rudy. You give it to the renter. You give it to the maintenance. You give it to Nirmala auntie. You give it to... Can I see, all the income is ultimately has to go. So you 5 people give it to Ravikant sir. You 5 people give it to Hari sir. You 5 people give it to Santosh sir. You, Ayya. And finally, what I will take, last two students are there, no? Those 2 students, please give it to me. Bah. So now in my returns, what should I show? Only 2 students. Kya baat hai? Is that how it works? No, please understand. What I have done is not correct. What I have done is I have applied my income. What I have done is I had a choice, and I utilized the choice to tell you to pay to somebody, This is called as application of income. Remember, in case of application of income, the income will be taxed in the hands of the transferor. So, when I asked you to give it to Rudy, I am the transferor of the income. Rudy is the transferee of the income. So, whatever money you give to another person, will it be taxed in my hands? Yes, it will be taxed in your hands. Another thing is called as diversion of income. By overriding title. What is diversion of income by overriding title? Let us say our Dhairya and Dhairyani. Let us say our Dhairya and Dhairyani, couple of the century, took divorce. Ayyogate. Why they took divorce, God alone knows. Dhairyani went to the court and she filed a case against Dhairya. Saying what? I have sacrificed my life for Dhairya. Yes or no? I have not studied because I became a housewife in Dhairya's home. Otherwise, I would have become something. Let's not even talk. And therefore, I request the court to offer maintenance from Dhairya's income. So court said yes, what she is saying is absolutely correct. She had sacrificed her life for you, for your kids, for your parents, for her own parents. Basically, she was not allowed to go out into the world and study on her own terms and go to the universities that she wanted to study. See, she showed entrance certificate also. Dhairya was thinking, she should have gone, I should have sat in the house. Unnecessarily, I told my CA karunga. Anyways, so the court said, Dhairya, from today, 50% of your salary directly has to go to your Dhairyani. Now she is no more wife. Ex-wife. He likes to get new terms. So ex-wife. Now who has ordered this? Court has ordered. So let us say Dhairya in a year earns around 40 lakhs. Straight forward 20 lakhs will go to Dhairyani. Now I want to know, this 20 lakhs that is going to Dhairyani, on this who will pay the tax? Dhairya. Will Dhairya pay the tax or will Dhairyani pay the tax? Dhairya. How many of you see Dhairya will pay the tax? How many of you say Dhairyani will pay the tax? Remember, Dhairyani only will pay the tax. Why? Because it is not application of income. It is not at the wish and will of Dhairya that the money is going to Dhairyani. It is by the order of the court. It is by an overriding title. It is a compulsion. It is not voluntary. And therefore, in such a scenario where the income is supposed to be given off to another person, not voluntarily, compulsively, then it will be taxed in the hands of the transferee. That means Dhairyani will pay the income tax on that 20 lakhs that she receives. Of course, this fellow's 20 lakhs will he pay? Yes, his 20 lakhs he will pay. But the money that she's getting free of cost, she will have to pay the tax. So what did you learn from this? Never be like Dhairya. Dhairya, what would you do in such a scenario? Chupchap pay. I like the honesty in the boy. Anyways, so he's like, sir, pay karenge aur kya karenge? Sorry? Sorry? You know the slab rates, no? 0 to 2.5, 2.52. So it's income. It's income at the end of the day. Don't bother whether she's... See, just because if you work, you will pay tax. No. There is active income, there is passive income. Now rent is what? Rent is passive income. Interest is passive income. Yes, what you earn from business, profession, employment, these are all active incomes. Whether it is active income, whether it is passive income, whether it is legal income, whether it's illegal income, income tax department has no say. In other words, will a drug dealer also have to pay tax? Yes, income tax is not bothered with the legality of the business. Income tax is bothered about whether you have computed your income properly and paid the tax correctly. So are we clear with these two terms, application of income and diversion of income by overriding title? Now I am coming to the third term. This is called surrender of income. Certain state governments actually I think even the central government allows surrender of income concept. What is surrender of income? Government says if you think that you don't need the money, then you can surrender your income to us. For example, there is a person, let us say his income is around 50,000 per month from employment. He doesn't want the income. Now you must be thinking, array, which kind of fool doesn't want income? There are many fools like this on this planet. Not everybody thinks that they have to earn all the time. Of course, generally in the field of commerce, our brain is tuned in such a fashion, we have to earn, without earning something will happen. But actually, there are many nice people on this planet. So in future you want to become nice, you can come. Charity begins at home. This is your home, second home. Anyways, so there are very nice people like BTechs, graduates. Correct or not? Recently I met one boy, told me and said, what do you do, Mr. Varun? I said, I do a little teaching, and I do my practice. I go to the factory. I sit in the farm. Like, why do you want to do so many things? Why don't you come and do Samaj Seva? I said, what do you mean by Samaj Seva? So he said, no, there is this Guruji we go to his place and then we clean the whole place. I don't want to name the place. It's in Moinabad. And we plant trees in his place. And we all, I said, how many people? We are around 5,000, 6,000 people. We do so much for, I said, how do you call it Samaj Seva when you're doing it for your Guru? No offense, but you're not doing anything for the community. Yes. You're doing everything for him. Correct or not? Basically, he is making you work. And you are of the opinion that you're serving God. At least I do something that serves the society. He said, how do you do Samaj Seva? I tell you how I will do Samaj Seva. Every morning I go and teach. With this education only, tomorrow they will pass CA exam and they will have families, they will earn. Samaj Seva or not? Yes. Correct. Next, after this I go to office. My clients come with always some tension. What is the tax law? How to pay the tax? What is the rule? What is the procedure? I help all of them. If I am able to help them, they are able to comply with the law. Therefore, there are no penalties. Therefore, under them, there are so many employees who are living lives. So, all their lives will be proper. Is it not Samaj Seva? Yes. Then I go to the farm and I see that employment is given to so many dealers, distributors, employees, labor. Yes. Is this not Samaj Seva? This is only called Samaj Seva. See, what we do is Samaj Seva only. Yes. What these engineering fellows think who don't have job is Samaj Seva means take one dabba, put white sticker around it. We are now going to collect money for the poor. For these people. Who asked you to collect for them? No, who asked you to collect? If you are so interested, tell me one thing. If an engineer collects like this whole day on the traffic, how much do you think he gets in a month? Instead, why don't you take up a job? And if you really think that these people need that money, donate your salary, no? If you really are of the opinion that you want to do Samaj Seva, why waste your time on the road? And nowadays I've seen so many NGOs coming up, and these NGOs are not one engineer, not one doctor, not one chartered accountant. Oh, yo. They will go to others, influence others also. Why don't all of you join my NGO? Now there will be 5,000 students, 5,000 working professionals who, that crisp age of 25 to 35. This is the time they want to spend in NGO. And do what? Samaj Seva. By doing what? By not working. They don't want to work. I tell them easier, so I'm telling that, boy, I'll give you a very good idea. I don't know if you appreciate it or not. But why don't you start working? You might earn 1 lakh or 1.5 lakhs because your qualification is quite good. The guy is from IIT, not even normal. From IIT, why don't you work? Yes, must be in the evening time. If you feel like it, go and ask people on the road. But major part, you work. And whatever you earn during your work, that 1.5, 2 lakhs per month, why don't you donate that? Instead of not working and telling people, I am working. Anyways, we'll come back to our surrender of salary. So there are idiots. See, this planet consists of people of all kinds. And sometimes, although I tell them so nicely, they will come back and say, this fellow is money minded. How am I money minded? I am doing Samaj Seva whole day. You do know. You wake up now at 5 o'clock every single day and come to class. I will see if you can do. I can do what you are doing. Definitely I can take one sticker and stand on the road. I can definitely do this. In fact, I can sit at the phone and keep calling people and say, hi, we are from this organization. Would you like to donate? How is this Samaj Seva? Recently there was a blind school. My grandfather, he gives blankets to different old age homes and blind schools on his birthday. So 15th August is his birthday. So he generally calls me. So we went. So we gave blankets, some pencil boxes and all that to the children. So the so-called headmaster or whoever takes care of these blind kids, he had come and said, you know, our students are so talented. I said, very good. What are their talents? You know, they can actually play chess, they can play cricket when you throw the ball. Not so fast like us, but yes, they can play. So they can do many things. I said, very good. How is the funding going on? Are you having enough sufficient money to run this institution? He said, yeah, actually, we are sufficient, but recently we got contacted by a few people. You want to meet them? They are here. I said, who are these people now? So basically, they are a group of 5-6 engineers again. And according to them, they can help the blind school. I said, how? They said, we have a brilliant idea. We will set up one call center and we will start calling people. I said, who? Sir, we only. We will call people. Only thing is, whatever is our electricity bill, whatever is our food bill, whatever is our transport bill, that all we will collect off from the donations. So let's say we call people and say, will you please help the blind? Will you please help the blind? And we collect 10 lakhs per month. Out of this, our expenditure we will remove. And whatever is the remaining, we will give to the home. I said, approximately what is your expenditure? You know, what is your expenditure? He said, nothing. We need one car. We need to make pamphlets, brochures. We need to make one website development. So, must be initial cost we'll spend around 30 lakhs. And on a monthly around 4 to 5 lakhs is sufficient to pay all our salaries. Then it hit me, these fellows are actually not helping them. They are creating employment for themselves. See, if they go today and work in anywhere else, they have to work from 9 to 4 or 10 to 5, which they don't want to do. So what these 5-10 fellows are doing, they're going to old age home saying, we will help you. And in fact, reality, the old age home is helping them. By saying what? Okay, please tell people that there are blind students here and act that you need to show sympathy. There is no sympathy to be shown. They are very healthy students. I told the headmaster, sir, why are you putting all these fellows? These people you are saying can play chess, they can play cricket. Can they talk on the phone? He said, yeah, of course, these people can talk on the phone. I said, on the phone, is there that braille touch which can tell them what are the numbers? He said, yeah. I said, every day for 1 hour, you ask the students only, the senior students in the blind home, to call up other people and say, I am blind, but I am talking to you. And ask them for some money. Why this beach ka intermediate of BTech students? And again 4-5 lakhs. I was thinking, how hard I should earn to earn 4 lakhs? Normally, how hard should a person work to earn 4-5 lakhs? Food bill it seems, transport bill it seems, air tickets it seems, exhibitions it seems, all their PR is happening. By doing all this, ask any engineering student why he is doing all this nonsense. He will say it will impact on my resume. It will impact on my resume. Anyways, this income, if somebody earns and gives away, if they surrender to the state, suppose I earn 1 lakh and I surrender, I will never, but if I surrender to the state, I want to know, will it be taxed in my hands? It will not be taxed. Although it is application of income, because it is under a scheme of government. Because it is under scheme of government, surrendering of income will not be taxed in the hands of the person who surrenders the income. But suppose I surrender my income to Mahesh, or to Vamsi, or to Dhairya, Papam, then it will be called as application. Are we clear with these three terms? Okay, very good. Let's start off with clubbing of income. The first section that you will see in clubbing of income is section 60. He says transfer of income where there is no transfer of asset. In other words, he is talking about application of income. When you are transferring of the income, tell me one thing. In whose hands will it be taxed? In the hands of the transferor or in the hands of the transferee? Simple. Write down first bullet point under that. In simple words, income applied, simple words, comma, income applied will be taxed, sorry, will be included in the hands of the transferor. In brackets, application of income. Under that, put one second bullet point. Unlike the above said, comma, in case of diversion of income by overriding title, in case of diversion of income by overriding title, or surrender of income, comma, section 60 would not attract. Section 60 would not attract. In brackets, no clubbing. In brackets, no clubbing. Are we clear? We must read 61, 62 and 63 together. What do they talk about? They talk about revocable transfer and irrevocable transfer. They talk about income arising out of the asset which has been transferred revocably or irrevocably. Let us take one example. First of all, what do you mean by revocable transfer? A transfer which is revocable. Kada? A transfer which can be reversed. Not exactly, but yeah, more or less. Suppose I give you an asset. And I tell you, whenever I want, I will take it back. Or I tell you, if I want, whatever income arises out of that asset, I will take. Or I tell you, if and when I want, whatever income arises, you have to give it to whomever I tell you. I understand three dialogues? Yes. First one, I can take back the asset. Second one, I can take back the income. Third one, I can control the income. First, take back. Second one, take back. Third, control. Anyways, in all these three cases, such a transfer is called as revocable transfer. What the section says, if any asset has been transferred revocably, or if the asset that has been transferred and such transfer is a revocable transfer, then the income arising out of that asset, will be included in the hands of the transferor, not in the hands of the transferee. So tell me one thing, suppose there is one person, he has transferred an asset, to another person, and let us say this is a revocable transfer, and this fellow, the transferee, is getting certain income, from transferred asset. He is getting income from transferred asset. In whose hands is the income to be included? Is it in the hands of Mr. A or is it in the hands of Mr. B? It is included in the hands of Mr. A. Now, what you said, if he revokes, no, please understand, whether or not he actually revokes, income should be included in the hands of Mr. A. Are you understanding what I am saying? Don't think if he takes back the asset, if he takes back the income, if he controls the income, then only will tax in the hands of Mr. A. No. Does he have the option to take back, the income, option to control? Does he have? Yes. Then it will be included in the hands of Mr. A. Are we clear? Sure. Understand? Okay. Now I want to know one thing. We'll take one simple example. Let us say this fellow Mr. A transferred to Mr. B certain government securities. What this fellow did? This fellow, he sold off the government securities and he purchased debentures. What did he sell? What did he get?
He sold the government securities and
he sold off the government securities and got debentures. And now he is getting interest not on government securities, interest on debentures. Now my question to you is quite simple. Think and tell me, interest on debentures will be included in whose hands? A or B? How many of you say A? How many of you say B? Why?
Sir, he sold the government securities.
He didn't sell. He transferred them revocably for inadequate consideration. B sold, yes.
He sold that and he got some other asset.
Correct. So
debentures is not related to us.
Debenture is not relating to A. Is that what you're saying? Acha. Now let me tell you what the section says. Section says whether or not that asset is in its original form and condition. In other words, tell me, see, what are we supposed to look at? We are supposed to look at who is the source or whose source of income is it? Whose source? See, ultimately how this fellow bought debentures? He bought debentures because he got the money from sale of government securities. Ultimately it is whose? Is. That's why we always say income whether on the original asset or on the asset in its transformed form will be clubbed into the hands of the transferor. Are we clear with that? So whether it is interest from government securities or it is interest from debentures, will it be included into the hands of A? Yes. Now let me take you another level. Now let us say he got interest on debentures. What this fellow did, whatever interest was piling up, he went and bought some other asset. Let us say he went and bought one house property. And then now he is getting one more income. He is getting income in the form of rent from house property. Why? How did he buy the house property? Whatever is his interest, he accumulated, he bought a house, and on that house he is getting rent now. Now my question to you is this rent going to be clubbed in the hands of Mr. A? How many of you say yes, it will be clubbed? Raise your hands confidently. The first thing, if you do mistake or do correctly, we have confidence. Okay, how many of you say no, it will not be clubbed? Why? Because it is. The section says only club the income. Do not club income on income. Only club income. Do not club income on income. So don't search for logic. Both of you are right. Only thing is, remember from now on, what you will remember, that there is only clubbing of income. What is the heading? What is the heading of this chapter? Clubbing of income, not clubbing of income on income. समझ में आ गया? Super. Now we need to know what is irrevocable transfer. Obviously, in plain English terms, any transfer which is not revocable is irrevocable. This is plain English terms, but it's not so simple. Let me tell you something. I'll tell you why I say it's not so simple. Let us say there is one fellow, Mr. A, and this fellow, one Mr. B. Mr. A told Mr. B that he can take one asset. Let us say that asset is debentures. And this fellow's dialogue was, if you die, I may take back. Until then, I will not. Acha, what is the dialogue that this fellow told? If you die, I may take back. Until then, I will not. Matlab, does he have a right to take back? But when? Only after the lifetime of Mr. B. Now, in the normal course, in English terms, you may call this as revocable. Why? Because as per the English dictionary, if any person has the option of taking it back, then it is called as revocable. But for the purpose of income tax, for the purpose of this chapter clubbing, if the transferor does not have the right to revoke during the lifetime of the transferee, it is called as irrevocable. Understand what I am saying? If the transferor does not have the right to revoke during the lifetime of Mr. B, after lifetime he can have, I don't care. During the lifetime of Mr. B, then it is called as irrevocable transfer. Are we crystal clear with this? In case of direct transfers. Yes, what is it out? See, why ask things which are not in the agreement? See, what you only tell me, if A dies before B dies, what will happen? You tell me. Suppose I gave you my BMW car and I told you, जब तक तू जिंदा है मैं वापस नहीं लूंगा. मैं मर गया तो तेरे पास गाड़ी रहता, खुश रहे. See, don't put the brain to questions which are not necessary. Now let me take an example of a trust. Okay. Now let us say there is one father. This fellow has 3 very notorious kids. One is CA, one is BTech, one is MBBS. So, he is a very proud father. but he sometimes gets scared looking at them fight because they three different professions, three different mindsets, impossible to live together. And every time they will fight and say, I will also see how you will come up in life. His father decides, he'll do one thing. I will not give any one of these three the property. I will not give one of these fellows also the property. What I will do, I will create one trust. I will create one trust for the benefit of these three fellows. I will transfer asset to this trust. Let us say debentures. Let us say land. Let us say any other government securities. Let us say jewelry. Whatnot. All these assets, whatever my family assets are there, whatever I have earned, I will transfer to the trust. I will appoint myself and my wife, that is their mother, as trustees. And whatever income comes to the trust every year, I will distribute to those three fellows. I will distribute to those three fellows. If I ever want to take back the assets, I can take back only after the death of all three. If I ever want to take back the assets, I can take back or I will take back only after the death of all three, if something like that happens. Otherwise, I will not touch the assets. So what is this fellow's dialogue when he transferred the asset? If all die, then only, Butler English, then only I will take. I will or I can take, whatever. Now I want to know, is this revocable or irrevocable? Normally, as per English terms, as per your dictionary, because he has a right to take back, you will say it is revocable. But what I am telling you is, see, if the transferor has put a condition that he cannot revoke during the lifetime of the beneficiaries, these people are not transferees. Transfer is the trust. If the lifetime of the during the lifetime of the beneficiaries, then such a transaction is called as an irrevocable transfer. Are we clear? If the transferor says, I will not revoke during their lifetime, then it is called as irrevocable. So, for the purpose of tax, did you understand what is revocable? Did you understand what is irrevocable? Did you understand that if the asset has been transferred revocably, then the income arising out of that asset should be clubbed into the hands of the transferor? Did you understand also that if the asset has changed form, that is, the fellow sold the asset and bought another asset, even income from that asset also will be clubbed?
Yes.
Did you also understand that if that income is reinvested to buy another asset which reaps more income, that income on income will not be clubbed? See, did you understand all these dialogues, all the sentences, all the law? Very good. Under page number 92, under section 63, is there some place?
Yes.
Write down there. First bullet point. In case of revocable transfer, either. In case of revocable transfer, comma, the income arising out of the asset in brackets original or modified, bracket close, will be clubbed in the hands of, sorry, in the income of the transferor. The income of the transferor. Are we clear? Super. Chalo. Next, let's go to section 64. Now I'll take two scenarios and I'll show you the difference in the two scenarios. In the first scenario, Mr. A gave his spouse a house property either for no consideration or inadequate consideration. What is the applicable section? Section 27. In section 27, what will we learn? Mr. A will be treated as deemed owner, and therefore income from house property will be taxed in the hand, not clubbed, it will be taxed in the hands of Mr. A. Now what I am going to teach you here, if any asset other than house property is given to the spouse either for no consideration or for inadequate consideration, then the income arising out of that asset will be clubbed back in the hands of the transferor. Are we clear? Similarly, do we have in section 27 for minor child also?
Yes.
In section 64 also you have for minor child. So let's read these two sections. Let's go ahead. Page number 93, section number 64, subsection 1, clause 2. In computing the total income of an individual, there shall be included all such income as arises directly or indirectly to the spouse of such individual by way of, oh, we are in 64.1.2, is it? Okay. To the spouse of such individual by way of salary, commission, fees, or any other form of remuneration, whether in cash or in kind, from a concern in which such individual has substantial interest, provided that nothing in this clause shall apply in relation to an income arising to the spouse where the spouse possesses technical or professional qualification and the income is solely attributable to the application of his or her technical or professional knowledge and experience. Come to the next page, page number 94, clause 4. Subject to the provisions of clause 1 of section 27, to the spouse of such individual from assets transferred directly or indirectly to the spouse by such individual otherwise than for adequate consideration or in connection with an agreement to live apart. Under clause 4, there you write down, in simple words, under clause 4 you are writing, in simple words, where any asset in brackets other than house property bracket close is transferred to spouse either for no consideration or inadequate consideration. Either for no consideration or inadequate consideration. Comma. Income arising thereof. Income arising thereof would be clubbed. In the hands of the transferor. Now in the exam, please be very careful which is the asset transferred. If they tell you house property, you will say section 27 deemed owner concept and all that. If they say other than house property, then you will say clubbing of income. The income arising out of the asset should be clubbed back to the hands of the transferor. Now let me take one more example. Let me take one more example. We have Gyan Professional Academy. Let us say there are two partners, Santosh sir and Harish sir. I don't want to put myself in the example. Chalo, I'll also put. There are three partners. And let us say Santosh sir gets married to another chartered accountant who is also having a passion to teach. So obviously, what do you think is the idea Santosh sir will give that person? Why don't you also come to Gyan Academy? Correct or not? So let us say Santosh sir gets Mrs. Santosh. Her names. And obviously now Gyan is paying Mrs. Santosh also remuneration. Now remember, Santosh sir has 1/3, Harish has 1/3, I have 1/3. So Mrs. Santosh is a chartered accountant as well as she is a teacher. Okay, put it in simple words, she's a teacher. Harish sir also got married to a chartered accountant. Harish sir already got married to a chartered accountant. You know it. Now, let us say this Mrs. Harish she's actually not employed at Gyan, but for the heck of it, instead of paying Harish sir, I just said give it to Mrs. Harish. Possible, not possible?
Yes.
See, whether Gyan gives to Harish or Mrs. Harish, do we have a problem? No. Now, this fellow also got married. Only thing is, doctor. I also thought, arey, this fellow's wife is getting, this fellow's wife is getting, why my wife should not get bolke? We thought, let's pay. Now, I want to know one thing. Is this correct? Can you do like this? First of all, in all probability, if the assessing officer ever checks the books of Gyan and he finds out that we made these two payments which are unreasonable or excessive, and these payments have been made to related person, what will happen? the excess amount will be disallowed. And here excess amount means whole amount only. Because that assessing officer will ask only one question. He'll say, Varun Babu, come here once. Why you paid doctor in Gyan Academy? Bye-bye. At least Harish sir can make up some story. I can't even make up that story. What I should say? We put camp here. Anyways, impossible. So, for all probability, in the hands of Gyan, it is disallowed. Let's not talk about in the hands of Gyan. Right now, we are talking about clubbing of income. Now, what the section says, section 64, subsection 1, clause 2. Clause 2. What it says, read it once. Salary, commission, fees or any other form of remuneration, whether in cash or in kind, from a concern in which such individual has substantial interest. Oh, so actually the bare section says Mrs. Santosh's remuneration should be included in Mr. Santosh, Mrs. Harish is in Mr. Harish, Mr. Varun's in Mr. Varun. This is what the section says. Luckily there is a proviso. What does the proviso say? Provided that nothing in this clause shall apply in relation to any income arising to the spouse where the spouse possesses technical or professional qualification and the income is solely attributable to the application of his or her technical or professional knowledge and experience. So, what the proviso says, if the spouse is qualified and the income is attributable towards that qualification, then there is no clubbing. So, check. Is the spouse qualified?
Yes.
Is the income attributable?
Yes.
So, here there is no clubbing. So, whatever is paid to Mrs. Santosh will be taxed in the hands of Mrs. Santosh only. But here, is there qualification?
Yes.
But is the income attributable? No. Here, qualification is there, but nowhere related to the academy only. So, in this scenario and this scenario, this Mrs. Harish's income will be taxed included in the hands of Mr. Harish. Mrs. Varun's will be included in the hands of Mr. Varun. Are you understanding clubbing provisions? So, when will clubbing not apply? If two conditions are satisfied. First one, if there is technical or professional qualification. Second one, income is attributable to such technical or professional qualification or experience. Are you understanding? Sure. Come on. Is there anything else under that? Of course, in the explanation it says, for the purposes of clause 2, the individual in computing whose in total income, the income referred to in that clause is to be included shall be the husband or wife whose total income referred to in that clause is greater. Oh, let me take one other example. There used to be one person. I don't want to, let's say instead of Harish, let's say there's a partner called Rahul. Mrs. Rahul. So let us say Rahul also wanted to transfer some income to his wife. But not only income, she wanted partnership also. So what Rahul did, he said, "ठीक है, मैं 1/6, Mrs. Rahul 1/6." So now you see, Rahul is getting remuneration. Mrs. Rahul also is getting remuneration. I want to know whose income should be clubbed into whose hands. Rahul's income should be clubbed into Mrs. Rahul's hands, or Mrs. Rahul's income should be clubbed into Rahul's income's hands. Because both of them have substantial interest. Because what is substantial interest?
More than 20%.
First check. No, there is. Because your plain reading is 20%, but that's not so simple. See what is the second explanation. In any other case, if such person is entitled or such person or more of his relatives, that means if any person along with his relatives has at least 20%, now tell me, Rahul along with his relatives, does he have 20%? Of course, this and this. Both of them have substantial interest. Now I want to know whose income should be clubbed into whose hands? Rahul into Mrs. Rahul or Mrs. Rahul into Rahul? It depends. It depends. First of all, whether they have qualification and the income is attributable to that qualification. Both of them are chartered accountants. Both of them are teachers. Very good. That means there is no clubbing only. Now, for example, if I say that this is not Gyan Professional Academy, this is a dairy farm. Okay. And as such, both of them are not qualified. None of them are qualified. The whole thing, no one is qualified. Now the clubbing provisions are applicable? Yes. Now you tell me one thing. Rahul into Mrs. Rahul or Mrs. Rahul into Rahul? Mrs. Rahul into Rahul. Don't come to conclusions. First you have to check whose income is greater. Correct or not? What does the first explanation say? First explanation says, first you find out whose income is greater other than this income. Correct or not? Other than this income. That means, take out all the income from the dairy farm, see some other sources, whatever income they are earning, whichever is greater, whosoever is great, in that person's hand. See, the idea of the income tax department ultimately is to collect a tax at a higher rate. Okay? Are we clear?
If they don't have other income.
If they don't have other income, then in whosoever hands you do it, ultimately tax is going to be the same. Think from the department perspective. Let us say both of them have no other income. In that case, whether you include it into Mr. or Mrs., don't you think the tax will be the same?
Yes.
Go ahead, no problem. Are we clear with this? Chalo, under clause 2, write down first bullet point. First bullet point. If a person has substantial interest in a concern, comma, second bullet point, remuneration paid to spouse shall be clubbed into the income of such person comma if any one of the following two conditions, if any one of the following two conditions is not complied. Number 1, spouse possesses technical/professional qualification. Spouse possesses technical or professional qualification. Number 2, income arising therefrom is attributable to such qualification and experience. To such qualification and experience. Under the third bullet point, third main bullet point. If both have substantial interest, club in greater earners' hands. Club in greater earners' hands. Are we clear? Okay. Next, as far as 64.12 and 64.14 are concerned, are we clear?
Yes.
64.16 is same as 64.14. Only thing, instead of spouse, it is son's wife. It is son's wife. You know, it's actually quite unfair that our Income Tax Act recognizes indirectly dowry. But it's also unfair that because of this section, boys end up paying the tax. Or should I say boys' side ends up paying the tax. Let me show you how. Let us assume this is father and mother of the boy. This is the boy. Let's assume that this is the father and mother of the girl. This is the girl. Let's assume that both of them are getting married. Okay. What should I draw? Okay. And let us say out of love and affection, the boy's parents gave an asset to the girl. An asset that yields income. So the girl is getting certain income. And that asset could include house property also, ma, okay? Similarly, out of love and affection, the parents of the girl have gifted certain assets to the boy. Obviously, the boy is also getting certain income. Indian society recognizes this part as dowry. Kada? Sir, ये बहुत गलत है. ये तो सही है. Anyways, now what does the section say? The section says, if any assets are transferred to the son's wife, matlab if the boy's parents give it to their daughter-in-law, then the income will be clubbed into the hands of the transferor. That means who will pay the tax?
Yes.
क्या बात है? अब ये देखो. These people, they also gifted an asset. But who will pay the tax? Now think and answer. Obviously, parents will tell the boy, see ma, we gave your wife the asset, so you pay the tax and take it from your wife. So ultimately the boy will pay this tax also, boy will pay this tax also. Suppose the boy goes and now asks his wife, see actually what happened, that rent you're getting, no, tax I paid, so will you please give it back. What do you think the wife will say? Lot of experience he has. Jao ji jao karte. Anyways, are you understanding? Guys, are you understanding what I'm saying? In other words, boy's parents give the girl, boy's parents pay the tax. Girl's parents give the boy, boy pays the tax.
Unfair, sir.
Unfair, no? But that's true. When a boy's parents give the girl any asset, we call it as tax avoidance strategy. Girl's parents giving an asset is called as dowry. Correct or not? So it's fair and square to at least remove them from the burden of paying tax. Otherwise, after giving dowry also, that will be ridiculous. No? Anyways, are we clear with what the section says?
Yes.
Sure? Hopefully we will not have this after 10 years. Let's write down on that, under that. In simple words, whatever you wrote on top, same thing you copy. Only thing this time, where any asset is transferred, don't put the brackets other than house property. Where any asset is transferred to son's wife, house property also, clubbing will happen. Where any asset is transferred to son's wife, SON apostrophe S. If you write ulta, meaning will change. Sorry? No, I'm not talking about the asset. I'm talking about income arising out of the asset. Where any asset is transferred to son's wife, either for no consideration or for inadequate consideration, income arising thereof would be clubbed in the hands of the transferor. Are we clear?
Yes, sir.
Now, let me take one interesting example. So, our Dhairyani, wife of Mr. Dhairya, one day came to me and said, honey, I would like to do something in life. So Dhairya said, what is it that you want to do? So she said, do you trust me? So these are difficult questions to answer. So he says, of course I trust you. She says, okay, I'm planning to set up one boutique. It's a high-end boutique. It would need a lot of investment. And profits will be crazy. Are you ready? Dhairya, are you ready? No option, sir. So I'll tell you how what Dhairya did. Dhairya told, Arey, Dhairya, he wants to control your wife. Everything he wants to come in. I'm telling you, like how they put outside houses boards, now they'll start putting like that boards. Mahesh not allowed. And outside your house, they'll put Mahesh present, beware. Anyways, so Dhairya very nicely told her, honey, I have full trust in you. I know you can do great. But you see, I think you should take some advice from your father. I think he's a very good man. And I think he will be able to decide for us, because I am a little confused about this boutique idea because I've never seen anyone do it before. I think you should go meet your father, and if he agrees, I will put an equivalent amount of capital with your father. I'm very comfortable with his investment. Because Dhairya was thinking by mistake also he will not invest. That was Dhairya's confidence. So Dhairyani went to her father, explained this. And you know how fathers are towards daughters. At the end of the day, whether it's a good idea or a bad idea, Jaan do beta. Simple. So apparently her father liked the idea very much. He thought at least this way you cannot lose lot of money. And he said, okay, I'll give you 50 lakhs. So obviously her father increased the size of the plan, and then Dharyani came back to Dharya and said, hey, I have good news for us. He said, what is the good news? Don't tell me your father invested. He said, yeah, my father invested. He said, how much? My father invested 50 lakhs. Now Dharya is confused because Dharya thought father will not invest and therefore he can escape from investment. So even then Dharya is very intelligent boy that way. So Dharya told her, see, I told you I'll invest equivalent to him. The word equivalent is very simple. Your father knows you from the last 25 years and invested 50 lakhs. I know you from last 2 years. 4 lakhs. Chalo. So Dhairya invested. Did he invest equivalent or not? See, father after knowing the daughter for 25 years just gave. In fact, he said, I will do more than your father for you. Because I love you more than your father. So he gave 5 lakhs to her. So apart from this 55 lakhs, she had her own savings. She obviously, Dharyani is very intelligent. Whenever Dhairya comes, she'll knock off his money. Anyways, like this she had her own 5 lakhs. So overall with 60 lakhs, she started her business. And she started her business, let's say on the 10th of June 2017. Okay. Now, days passed by. Suddenly September came. And then again 15 September 2017, that day Dharyani asked Dhairya, do you want to see me successful in my business or not? He said, yeah, that's why I gave you 5 lakhs, no? She said, no, Dasra and all are coming and I need a lot of money to buy a lot of inventory because all my clients are just calling and ask me, Dharyani, where is this? Dharyani, where is this? So I'm not able to take so many calls and refuse to their orders. So why don't you give me another 15 lakhs? He says, is the business doing good? She said, yeah, I've already made 10 lakhs profit. This fellow is thinking, Arey, main itna kaam karke bhi itna paise nahi kama raha hu. So why not give her the money? So he gives her another 15 lakhs. You understand what I'm saying? He gives her another 15 lakhs. And the business actually does well. The business actually does well. And by the end of the year, 31st March 2018, when she made her profit and loss account and all, she had a net profit of, let's say, around 10 lakhs. Now my question to you is very simple. This 10 lakhs is profit out of business, and the business needed 75 lakhs capital. I want to know how much part of this profit should be clubbed into the hands of Dhairya. You are understanding my question? How much of this 10 should something be clubbed into his hands? Definitely, because we said if any asset has been transferred and any income arising out of that asset, then income should be clubbed. Definitely money is also an asset. No, the money that we are giving is also an asset. We know Dhairya is giving is also an asset. Using that money only she got that business. Using that business only she got that income. Now my question is, how much of that 10 lakhs will be clubbed into the hands of?
How much he contributed?
Proportionate. Very good answer. Proportionate. What proportion? So how much is this contribution? What you're saying is total contribution is 20. Now this is where you will differ a little from what the book says. The law says whatever is the proportion of the investment in capital as on the first day of the previous year, that proportion clubbing will happen. So what is this fellow's share? 5 by 60. 1 by 12. So, how much profits will be clubbed? 1/12 of the profits will be clubbed. Achha, next year. See, next year starts from here. On this day, his capital is how much? 20 and total capital is 75. So, in what proportion next year clubbing will happen? 20 by 75. Are you understanding? Clubbing will happen in the ratio of the capital, opening capital to the total capital as existing on the first day of the previous year. So every previous year, are you supposed to check what is the capital contributions? Yes. And the year in which all the capital contribution is returned, let us say out of the profits, the area says, I also need some money, please give no. So he takes his money back, then there will no more be clubbing. All of this you will find on page number 95. Can you see explanation 3? Yes. Under explanation 3, write down. Under explanation 3, write down. Where capital is contributed towards business, where capital is contributed towards business, as a sole proprietor, comma, income arising thereof, in brackets, that is PGBP, bracket close, shall be clubbed in the ratio of the contribution made to the total contribution as existing on the first day of the previous year. As existing on the first day of the previous year. Now answer one question for me, because this is very important. If you can answer this, that means you've been able to understand something very important. Let us say instead of Dhairyani opening the store herself, she along with Dhairya, tera dost kaun hai? Best friend. She along with Dinesh opened a boutique and Dhairyani got 60, Dinesh got 60, total 1.2 crore. And साथ में they made a profit of, let's say, 30 lakhs. I want to know how much part of this 30 lakhs, which is profits from the firm, is to be included into the area's hands. Why? Not a... Acha, but why? But why? I'll tell you why. Firm is a separate entity altogether. Firm already pays the tax. Share of profits in the firm are exempt in the hands of the partners. And exempt income, you cannot do clubbing. Understood? So, if by mistake they say, or not by mistake, if intentionally they say that the business is not a sole proprietary, it is a partnership firm, then will there be clubbing? No. Why? Because share of profits in the firm are exempt in the hands of the partner. See, once Gyan Academy pays the tax, will I pay tax again? No. Write down second bullet point. Second bullet point. If the business is run as a partnership firm, comma, there is no concept of clubbing of shares, clubbing of share of profits. There is no concept of clubbing. Enough. There is no concept of clubbing. If you want to write down, you can write down in brackets, because share of profits is exempt in the hands of the firm, in the hands of the partner. Because share of profits is exempt in the hands of the partner. Are we clear? After section 64.1.6, can you see two more sections on page number 95? 64.1.7 and 64.1.8. These are again the same things to spouse and to son's wife. Only thing this time it's not directly. It's indirectly through an AOP. So instead of me giving it to my spouse and getting caught under 64.1.4, what if I give it to an association of persons and ask the association of persons to transfer the income to my wife? Then 64.1.7 and 64.1.8. Okay. Tomorrow when we meet, we will learn 64.1a, which is very important, minor child's income, how clubbing should be done. Okay. And of course, hopefully, tomorrow we will also do aggregation of income and the last chapter, that is carry forward and set off.